Welcome to Remarkable Retail Podcast, presented by Celonis, our Season 8 grand finale episode. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our very special guest to wrap a fantastic season of special guests is Janet Hayes, CEO of Crate and Barrel Holdings, a role she started in August 2020, right in the middle of the global pandemic, and catalyzed a pivotal shift, as they say, in consumers' lives and in the retail industry as a whole. So it's great to have that context. Janet is generous with her insights, and I just thought it was a great conversation. Now, you mentioned, you sent me a text, a slight correction. It was funny when you said it. I caught it, but I wasn't quite sure. In our last episode, our interview with Ariane from JD Sports, you said she loved your phrase, but it's not your phrase, about silos belong on farms. But I think you said it was Bob Schamberg, but you meant someone else, right?
Yes. So Bob Schamberg is a former colleague of mine at Sears. He was also in the marketing department, but I said the wrong Bob. Bob Schamberg was the VP of marketing, but it was Bob Thacker, who was also in the marketing group at that time, who actually said it. So want to just clean that up. I got my Bobs wrong. Both good guys. And both involved in Sears marketing back in the day. But yes, Bob Thacker is the originator of the silos belong on farms thing that I have quoted. Do you think I've quoted it enough that I would get the guy's name right? But this is what happens as we get older.
Yeah, that's a lot of
too many Bobs.
It's too many Bobs to deal with. Let's talk about the summer and our plans for the pod. Something a bit different for the people. We're leaping into the summer months.
Well, we are. I think we teased this maybe last week that we're going to mix things up a little bit, think a bit more radically, and stretch ourselves. So, well, first of all, we're going to be off the next 2 weeks, so give people a chance to catch up on our excellent episodes if they haven't stayed current. And then we're going to do a special 6-part summer series, and the focus is going to be on accelerating retail transformation as the pace of disruption increases. So, we've been touching on this a little bit, but we'll go a bit deeper. We'll also have shorter episodes, so we'll give people a nice little tidbits to enjoy on their beach vacation or whatever they might be doing for the summer. So, yeah, sort of key lessons from Leaders Leap, but try to tie it pretty specifically to the retail context.
Fantastic. And we'll be returning for season 9, back on the mic together, and quoting Logan Roy from Succession, a bit of spice, a bit of fun, and a bit of truth, along with a fantastic roster of great retail guests to help us understand this amazing industry. So we'll be back in very early September with the full season and the format you've come to love, come to enjoy and come to love. All right, let's get into the news of the week. Let's talk about Amazon. My goodness. What a behemoth. And lots of news coming out of Amazon. Let's start with their market capitalization, not just some finance equation. It's pretty startling.
Well, Amazon, of course, has been one of the most highly valued companies anywhere for a number of years. I guess, I don't know, was it a couple of weeks ago we talked about NVIDIA becoming the most valuable company on the planet? Well, Amazon has become the first retail entity or anywhere retail related to surpass $2 trillion in value. And it's really, and who knows, obviously things move around. We've seen NVIDIA's stock pull back, for example. So we'll see how whether they're able to stay above that. But, when you think about just the continued growth of Amazon overall, but the thing I know we've touched on, I guess the last time they reported their earnings, is how much they've not only been able to have great sales growth, but really expand their profitability. Yeah. I think some of this is just, leveraging their fixed costs, some of the cost reduction initiatives that Andy Jassy's been pushing for the last couple of years. But, I think a big part of this too is how big the ads business is becoming. As much as people talk about AWS, it is arguably the case that the ads business is the most profitable part of the Amazon flywheel right now, and it's growing at 20+%. The other piece of news that came out last week, though Amazon has not confirmed this, So it may not be true, but the information reported that they are going to launch a Chinese direct discount section. So shipping products that are less than $20 is the report directly from China. So this is their Temu Shein fighter, I guess. Not terribly surprising. I think I posted on social media that the only surprise was that it actually took this long, because Amazon's generally pretty quick to respond, and you don't have to be a genius to see the incredible, just on a pure basis, the size of Temu and Shein's revenue, but also the growth, which has been just extraordinary. So we'll see if that gets confirmed, and presumably that will be live very shortly. So we'll see what that looks like. And then just quickly, because it's related, as expected, Shein has filed confidentially for an IPO in London after their attempts to try to see if they could go on the, I guess either of the U.S. exchanges aren't looking like they're going to materialize. One little kind of fun fact, I think we talked about whether maybe a couple of weeks ago, we talked about just in general Shein's charm offensive and not being able to join the NRF and so forth. Apparently, they were also trying to court the British Fashion Council's support, but they didn't get it. So they are damming the torpedoes, apparently full speed ahead with an IPO later this year.
Let's talk about Walgreens. So some not great news coming out about Walgreens. I mean, my goodness, 8,600 stores. I didn't know the fleet was that big. And they're talking about, after this earnings whiff, I think we could describe it. They're talking about closing. Maybe they're talking about closing a lot of stores, but maybe that's an interpretation.
Yeah, things have gone a bit haywire, I guess you could say, there during the past year, because their performance has been quite lackluster. They've pulled back from some of their plans. They've had a bunch of management changes. But yeah, this past week they reported very disappointing earnings and a poor outlook. The stock took a big hit. But they also said the specific news was they are taking a look at about 25% of their stores that are unprofitable or don't have good profitability prospects. So they did not, some is a little bit misreported, I think, that they were planning to close a quarter of their stores. They have not said specifically. They said they were putting, I guess, a quarter of their stores kind of under the microscope to see, but that they were expecting to plan to close a significant number of stores, but TBD on the exact number. It's I think Walgreens in a way is a good example of both the overbuilding of physical space. They and others, CVS, et cetera, have continued to open a lot of stores in kind of this war for convenience. At the same time, a lot of these products have become quite commoditized or readily available in other places, whether it's a pharmacy at Walgreens or a pharmacy at Walmart or online players, right? So I think there's just a lot of capacity chasing too few places, and it's pretty hard to differentiate yourself. And I can tell you where I live, and I live in a relatively urban area, so it's not totally shocking. But I could get to one of 3 Walgreens within about 6 minutes, and 2 CVS's, as well as a pharmacy at a Tom Thumb and a Target, and so I think a lot of people it's just an over deployment of physical space. So some pulling back, I think, is expected. But I think the other question is, what are they really going to do to differentiate themselves more in the marketplace? Because there's just so much repetitive product out there, whether we're talking about the health and beauty space or whether we're talking about cosmetics or, it's just overwhelming amount of choice.
And we've seen structurally a bunch of folks pull back, right? Walmart had a pilot they're running. Actually, I think in Dallas they pulled back, and Amazon's pulling back. So I think there's some structural stuff. Maybe we need another pandemic to kick off growth back in the pharmacy business.
Yeah, I do. And at the face value, I thought this was well intended anyway. That if you've got a lot of commodity products, are there opportunities to get into higher margin things, whether that's more specialized products or I guess services? And so at one level, the service piece seemed to make a fair amount of sense, particularly if you can leverage the space. If you've got too much space in your stores, then you're putting in little clinics or what have you. So
Sure.
I have to say, I'm not sure why that has seemingly been so difficult for these big companies to make it work, because certainly they have the resources and we're trying a bunch of different things. But yeah, for the most part, it doesn't seem to be playing out very well, at least so far.
Not a big earnings week, but we had a couple of shocks. Let's talk about Nike.
Well, this at one level, I guess it's shocking. At one level, it's not. As we've talked about, and it's gotten a fair amount of press over the last year or so, Nike has been struggling, particularly a lot of the narrative has been around the kind of overinvestment in the direct-to-consumer strategy. I think that narrative has also evolved to be a lack of innovation, as well as just a huge amount of competition. But there was some sense or hope, I guess, is probably a better way of saying it, that they were starting to get back on track. Well, they released their quarterly results, which not only were surprisingly bad, but they painted a particularly gloomy forecast, and the stock has really taken a big hit. One of the things I took a look at, aside from just what happens on a particular day or week in a year, is how the stock has performed over the last several years. And it's been a pretty chronic underperformer relative to other major retailers, other major consumer brands. So the company's really struggling, I guess, I'll say find its footing. I don't know if that's a bad
good one.
The other thing I think is interesting is apparently their margin performance in direct is worse than their margin performance in wholesale, their gross margin performance. And that's just weird. So I they did allude to some of the product transitions they're making and kind of rebalancing of inventory. So, with any luck, that particular profit hit is just something they can work through in a quarter or two. But the bigger challenge there is to really get the top line moving. And they did not give the market a ton of optimism that was going to happen anytime soon. So far, it's been a little, some jazz handing around some of the strategies, and it's been more on the cost reduction side. But cost reduction is not necessarily going to help you get that top line going.
In the same kind of, I don't know if you call it a shock or whatever, H&M, another big global retailer with a pretty big global miss. Operating profit came in at 7.1 billion Swedish kroner, 672 million, below what everyone thought they would be. So their stock's taking a hit. And do you read anything into that? Is this an evolution of H&M? Are they getting stung at all by the Sheins of the world? What do you see the pressures on their business?
I think it's probably twofold. This broader kind of discretionary spending narrative, even though they are definitely on the value side of things, they're kind of a step up from the ultra cheap fashion. So maybe they're getting caught up a little bit in just people pulling back,
trading down
on discretionary spending. Or the trading down. Whether, I got to think to a certain degree, Temu and Shein are affecting them. I don't know how much. I haven't seen a lot of stats about the overlap of spending there versus players like H&M. But it was quite surprising because I was actually just in several H&M stores in a bunch of different cities, and I thought they looked good. So apparently, I don't have the ability to discern how that translates to quarterly earnings.
And in, I guess, the not so shocking category of earnings, let's talk about JCPenney and Forever 21.
Well, I don't know how to feel. I'm sort of hoping that JCPenney would be showing more progress. They're almost a couple years now into new CEO, new strategy. I guess not quite a year ago, they announced $1 billion capital plan to try to revitalize the business. But so far, anyway, the numbers continue to go in the wrong direction. The sales were down 8% for the quarter. Oh, and I should probably mention, because they are a private company, they don't report nearly the level of detail, and they don't do investor calls and things like that in the traditional sense. So we have a lot less commentary and in some cases a lot less information, but they do give some high-level numbers. Their losses widened. They went from a $56 million positive EBITDA to negative $3 million. The good news is they've got pretty good liquidity, strong balance sheet. So there's no imminent kind of capital crisis here. A couple of things I just want to mention really quickly, which I think are worth keeping an eye on. One is, like I said, they talked about this couple-year $1 billion plan, and I think we previously talked about how that's really not that much money in the scheme of things, given the size of their business. Yeah. But they don't seem to be spending it at the pace that we would expect it. My calculation is they're spending at about half the rate to get to $1 billion through 2025. So I don't know if there's something there just about backloading some of that spending, or whether that suggests maybe they're slowing their roll a little bit, given the what they're seeing in terms of return. I don't know. That's really speculation on my part. The other thing is they share some data on some of their store level performance, and I think this has to do with some separate financing or loan covenants on some of the portfolio of stores. And you can see at least a snapshot or a segment of the stores that are really struggling to have profitable four-wall contribution. And the reason I think this is important is, generally speaking, when you, as I'm sure you would know, when you look at store closings, the first thing you basically look at is, well, which stores are accretive to cash flow versus not. This analysis suggests that there are many dozens of stores that are currently negative and dozens more that are barely there or kind of on the edge. Now, I don't know how representative this slice is to the total. So it's hard to characterize. But at least on this snapshot, if somebody said you want to go on a store closing binge, you'd have quite a few candidates. But, we'll see whether Penny's can turn it around. Also, to the extent, they're hopeful of things turning around. You wouldn't necessarily close a store just because of a few quarters of weak performance.
Same category, but probably a little bit worse. Forever 21, Forever in Trouble, with the same owner, right?
The reason I thought I just mentioned this quickly is, Forever 21 was basically saved in essentially the same way that JCPenney was from going to the dustbins of history, because Brookfields and Simon Properties, two of the big mall owners in North America, and Authentic Brand Group, so this is called Spark Group, stepped in to buy them at a low price and strategically to keep more of these stores open and not have to deal with a ton of vacancies. Forever 21's business continues, even though they shut a bunch of stores and got a new capital structure. It continues to be really tough. So the story was that they are seeking rent concessions. I think basically they're saying, look, if we don't get some rent concessions, we're going to be closing a bunch more stores and trying to use that as leverage. So again, this may be a little bit like the H&M story, which is they're getting caught up a bit in some trading down, discretionary spending pullback, as well as just more and more competition. So we'll see where that goes. I don't think there's any suggestion that they are perhaps headed to Chapter 11 again anytime soon, but obviously they are trying to find some relief and improve their cash flow.
Well, all right, that's a wrap for our news for this, our final full episode of Season 8. Let's hear a few words on behalf of our presenting sponsor, Celonis, before we get to our fantastic interview with Janet from Crate & Barrel. Want to ramp up speed and productivity for your entire retail operation? In the Celonis Process Mining for Dummies Handbook, we show you how Celonis process mining technology, enhanced with process intelligent AI, can help you streamline performance across your entire retail business so you can drive lasting value from end to end. That means purchasing, supply chain, omni-channel execution, merchandising, and customer service processes, all managed and optimized through one powerful software solution. To get your free copy of Process Mining for Dummies and see how it's generated millions in value for brands around the world like Aldi, Globus, and Edeka, head to celonis.com/remarkable retail.
Well, Janet, welcome to the Remarkable Retail Podcast. Where do we find you today?
Thank you. So happy to be here. I'm coming to you from a sunny Monday morning in Chicago.
First of all, I lived in Chicago for 20 years, and I used to drive up and down Waukegan all the time past the Crate & Barrel headquarters. I don't think I ever made it inside, though I've certainly been in plenty of your stores. But in any event, we're delighted to have you here. Generally, we like to kick things off by just learning a little bit about our guest and what they do and how we found ourselves together today. So would you mind just taking a minute or two to talk about your personal and professional journey and the work you do at Crate & Barrel?
I will. Yeah, I'd love to. Thank you for having me again. I'm coming to you, as I said, from Chicago, but I grew up in California. And I'm one of 6 kids, and my whole family is back there, including my parents. So I'm finding myself in a new location. I've been here for 4 years, and I absolutely love Chicago and the adventure that we signed up for here. So I brought my two twin girls here as they were entering their sophomore year of high school in August of 2020. So we really did sign up for a big adventure. My husband came with us as well. Can't leave him out. And it's been quite a ride.
Excellent. And would you tell us just a little bit about, because you have worked a few other places, maybe just a little bit about your background before we get into the Crate and Barrel story?
Yeah, I'd love to. I was thinking about this on the way in today. So it's been really well over 30 years since I've been in retail. It's been a good 30-year journey. I consider myself extremely lucky with where I've worked, who I've worked for, and who I've worked with. So it started when there were divisions of Macy's. I worked for Macy's West in the home division. I started there out of college. And I was working on the sales floor to begin with. And then I moved myself into the buying office there in Macy's West. And I really learned at the end of the day that department stores weren't quite right for me, but it was a good learning experience. I moved from Macy's West almost down the street to Gap Corporate. And I helped the Gap start Gap Body, which was one of my favorite experiences in my career. I was one of 5 people that helped start Gap Body. And it was like a startup in a fully funded company. I worked for Mickey Drexler there. And if I learned anything from that experience, it was how to be a merchant. And that began my career. From there, after 5 years, I went to Nike up in Portland, Oregon. And that's where I would say I kind of honed my skills with the best in marketing, just an incredible marketing machine. And I learned the wholesale business, which came to help me later in my career. So Nike, I really worked with my marketing and wholesale. I went from there to American Eagle just for a short stint. It was over in Pittsburgh, Pennsylvania. And if I learned anything from there, it was just that's probably when my values started coming into play. And I was really checking my personal values with company values and really started to zone in on who I was becoming and who I was working for. From there, after that, I went to Williams-Sonoma Inc., back to California, kind of, if you will, back home. And I spent 13 years there, really honing digital expertise, financial acumen, P&L leadership. I led 4 brands through the 13 years there, incredible experience. And at the end of my 13 years there, I thought, well, what's next? What am I going to try to keep learning and growing? And I had never done consulting. So I took a short gig, which I feel incredibly lucky happened to me, with Magnolia Home down in Texas. And I was working for Chip and Joanna Gaines.
Michael and I were actually, I had been down there before, but Michael came to visit me in Dallas, and we took a little road trip, not just to Magnolia Home, but we got a chance to check that out. It's really, really impressive.
People that Isn't that impressive?
Yeah.
It really is. And I would encourage people to go. I had the opportunity to work directly with Chip and Joanna. And from there, I learned probably one of the most important lessons so far in my life, which is around humble leadership. Those are 2 of the most talented, grateful, humble, creative leaders I have ever worked with, and they still continue to be to this day. They inspire me. And that then really led me to, I got a phone call when I was working for them from Germany, from Crate and Barrel Holdings. And they presented the opportunity I sit in today, which is CEO of Crate and Barrel Holdings. And I thought, well, this is probably what I've been working for, an opportunity to affect a culture, to affect a company, to change a trajectory of a business model, and to really build a customer experience almost from the beginning. So I had to take that job, and that's where you find me now.
Wow. What a journey. Hey, quick question. Did you, sometimes retail has been described as the accidental career. It doesn't sound, you're certainly very purposeful time since you joined retail. Did you always plan to be in retail? Was that something that always attracted you?
It's a great question. I did not. I actually in college studied to be a teacher.
Oh.
I wanted to be a teacher, and about 30 days before I was about to graduate, I thought, God, I don't want to do this. This is not what I want to do. And I had been working retail in high school and all through college, and I thought, you know what? I love this. I don't understand what career it is. I don't understand where it's going to take me, but I kind of like it. I think I'm pretty good at it. So I just went where my passion was and just took a big leap. I had no role models, no understanding of where it was going to take me, but I just knew that I loved it.
Yeah.
And it seems to have worked out.
Yeah, it seems
okay. It seems okay.
Well, it's retail industry is such a meritocracy, right? So it really benefits those who have that passion. Now, let's take a quick step back. We have an international audience. Most people in North America would be very aware of at least the flagship brand of Crate & Barrel. Could you take us through a little bit of the scope and scale of the company itself, just to ground out all the listeners?
Yeah, of course. Crate & Barrel Holdings, for context, we're currently about a $3 billion company on our way to $5 billion. We have experienced explosive growth over the last few years, and we want to make sure our tech and operations keep pace to provide the type of service we promised our customers. We are a family of 5 brands. There's the Crate & Barrel brand, and the Crate & Barrel brand has always served to inspire our customers to build a home they love. Really, we think about it as timeless pieces that are meant to last. We're able to cover every room in the house through this one brand. And it's really important to our customer to be able to rely on the quality that comes from Crate & Barrel. The second brand is Crate & Kids, and Crate & Kids is the go-to brand for beautiful elevated kid spaces. And we hope to empower the self-expression of little ones, but also we know that it's the parent's house. So we have to make it cool and beautiful and bring that same quality in there. And then we have CB2, which I believe CB2 is transforming the perception of home design for today's customer by bringing covetable, high design collections to a wide audience with designers like Frattini, Lawson Fenning, Paul McCabe, Ross Cassidy. And these type of designers weren't readily accessible to an everyday customer until a few years ago. So we see CB2 as being a leader in online retail as well as physical stores. And we are expanding our physical footprint, not only in the United States, but also looking to expand in Canada, where we have 2 stores for CB2 in Canada today. And then we have Hudson Grace, which is one of the newest members to the Crate & Barrel holding family. It's a destination for high-end gifting and entertaining. Today, it's beautiful. If you need a beautiful candle, please go there. If you need beautiful plates, please go there. And this is one of the brands I'm most excited about in our future. And then last, we've really developed quite an outlet business over the last 4 years. And that's where all of our brands come together under one roof. And we will also be looking to, we're in the United States, but also expanding into Canada. So we're about 60% digital, which I think people kind of close their eyes and imagine a big, huge Crate & Barrel store. And they think we're everywhere. We're not, it's a really beautiful omni model. We're not overstored. We're very strong in our digital business, and lots of room to grow in front of each of these brands and multinational.
Oh, fantastic. Quite the enterprise. My local Crate & Barrel is just a few blocks away. So the beautiful store at Square One here in Mississauga.
Square One, yes. Yeah, definitely.
So you've been there a couple of years, a couple of 4 years. I'm kind of curious on your take on the company's growth evolution and where you see the brands today. I mean, it's been a very interesting 4 years given the COVID. We'll talk about that a bit later. But how do you see it today? Where do you see the brands positioned today? Are you where you want them to be, or still work to be done? Still work to be done.
But I'm pretty happy with the work that has been done that I've had the view to in the last 4 years. We have reevaluated our capital structure, and we have focused our investments into technology, particularly in transforming the supply chain. We are doubling our tech team over the next few years to really take a modern view of a customer experience from ordering all the way through delivery. And like I said earlier, these brands have experienced extensive growth. in the last few years. But the most important thing we keep our eyes on is the customer. And we have to fulfill our promise to the customer at all times. And that means not only an inspired shopping experience, whether that's online or through the store, but also all the way into their home. And that's where I realized we had opportunity. And we have, again, invested quite a bit into our supply chain. We are going to have a completely different experience in the next 18 months to be able to deliver quickly, to be able to deliver quality and put that timeless piece right into the customer's home with ease. So I'm happy with where the brands are evolving. I'm extremely excited about where our service is going. It's going to be, the brands have been around for 60 years. We just celebrated our 60-year anniversary a couple of years ago. My job is to really take this through a modern filter into the future. And we're going to be here for the next 60 years with quality and service.
One new expression of that, I guess, pretty big new expression of that, is your flagship store that you opened in Manhattan, I guess, towards the end of last year. Could you talk a little bit about what you were trying to do there, how it's going, and what that might be saying about how you're going to move forward in both the physical and digital world?
Oh my God, I wish we had hours. Happy to talk about it. It's actually one of my favorite projects I've ever worked on. I've opened a lot of stores in my life. I've closed a lot of stores in my life. This was absolutely one of my favorite stores I've worked on. Our lease came up for a Crate and Barrel, and we were down in the Soho area, and our lease came up, and we started walking the streets of where we wanted to be. And we saw a building in the Flatiron district, right across the street from ABC Carpet and Home. So already it was a great location. I walked into the building, and I'll tell you, I spent 30 minutes in there in silence with my head of architecture and the head of visual for the Crate and Barrel brand. None of us were talking. We walked the first floor, we walked the second floor, we walked back out on the street, and I said, I don't think we can do it. I don't think we can get that bottom floor where we want it. And we were all a little bit sad. We went to lunch. We were talking about it over lunch, and we continued walking the streets looking for real estate. And we left and came back to Chicago. And I woke up the next morning, and that building, it was haunting me in the best way possible. I couldn't stop thinking about it. There were these beautiful neoclassical pillars that were going down the middle. It had so much history. It was actually circa 1868. And it was originally the home of the Palace of Trade, which, how great is that? Isn't that, just the history of it. So I got us all back together, and I said, I can't stop thinking of it. It's haunting me. Let's do it. And it was a combination of talent, creativity, and customer service coming together in a way that we said, let's make this thing like nothing we've had before. So the overall design of the store, we tried to keep as much intrinsic to the history of the building as we could. We kept the columns. We had to replace the floor, but we also wanted to put a little modern aesthetic in. So we did this beautiful volcanic ash tile wall as you walk in that pays homage to the energy and dynamics of the city, but also the history of Crate and Barrel. So if you look at that wall, and if you know, you can see shadows of plates and tongs of forks, which is what our company was started on. We designed all the lighting in the store, which is now for sale to the public. The cash wraps almost feel like old, beautiful bank trade vibe. Just the white plates at the end of the first floor. We wanted to pay homage to how Crate and Barrel started, with Gordon and Carol Siegel going and bringing back beautiful, simple white plates, incredibly affordable. So it has turned out to be a joy. It is about 30% smaller than our footprint in Soho, yet it feels bigger.
It doesn't feel like that at all.
Yeah, no, it doesn't, does it? Right. Yeah.
It feels more immersive and it feels much more open. Yeah, much more spacious. Yeah, for sure. I've been in both, and you got some great neighbors too. It's a great area. The renaissance of the area continues because retailers like you go in there and do a fabulous job. Let's take a let's take a turn back to the COVID era, where you joined the company, and Steve and I have called it, as we look back on that era, the great buy forward. A lot of people bought a lot of things, invested in their homes. How did that that really bolus of volume and the subsequent kind of like calming, so to speak, how has that affected the strategy and the way you lead the organization coming out of the COVID era and looking forward?
Yeah, it's affected us quite a bit, not only our customer, but our employees as well. And I was certainly not happy that any of us had to go through it, but it's brought a really nice focus for us and for our customer. There's been a recentering, if you will, on what's meaningful in our lives, the way we view home, the way we view work, the way we view ourselves, honestly. From our customers' point of view, we see them leaning into purchasing fewer, more meaningful items that will last. And that really fits into who we are here. Quality is the center of what we do, but we also put more focus on the earth around that. So we are working with much more sustainable materials, whether it's FSC, organic cotton. We're talking about recycling, recyclable, upcycle, just really taking a moment to say, how can we make this last for our customer? How can we make it better for the earth? And we have made great strides in that. We also wanted to prioritize the human over the transaction. And we really put a lot of focus on connecting with customers. And that's when we started building up our design service business, and making sure we could be there to help the customer take their home to a new place. During COVID, as you know, every room needed to serve multiple purposes. And it was difficult to figure out how for our customer to do that on their own. So we started a digital design service business that then translated into the stores. And even when we go back and look at that New York store that we were just talking about, there's two big design areas in that store that the customer can walk in either on the first floor or the bottom floor and get help with any design project that they want, all free of charge. We do the 3D renderings. We can do mood boards. We can go to their home. We've been helping restaurants. We've been helping hotel lobbies, anything. Any project at all, we've circled up around the customer to say, let us help you. And we've surrounded that not only with very talented people, but also with new technology. And then finally, a lot of change came with the employee too. And I had to take a look at what was making the employee's life hard here with a kind of a new modern mindset and work to make it easier. And they can be simple things as, altering a work week, all the way to really important investments we're making now around new point of sale. And while that might sound really important to the customer, and it is, it's also going to be life-changing for our employee who has to work in old systems, ringing people up and getting them out. And sometimes that could take, depending on the sale, it could take 20 minutes at some time. But we're moving to a new investment in a point of sale that will roll out to the end of the year, which I think is going to be game-changing. We're investing in a new planning system so our planners can work quickly and smart and use AI and ML to inform their decisions. So everything has become about how do we make life more meaningful or efficient and able to spend time with people they want to spend time with.
Well, maybe I could just follow up on that a little bit more, because one of the things that I really enjoyed, I was fortunate to be in the audience at the World Retail Congress in Paris when you were speaking about Crate & Barrel's journey and so forth. And one of the things you featured your New York store, as we talked about, but you also talked about the role and impact of technology. I wondered whether, for our audience, if there's something you've learned or things that you think other folks should really focus on to get that blend between being very customer-centric or human-centered, or however we might describe it, and leveraging some of the advances in technology.
I feel really fortunate that we were able to have support from our parent company to invest during this time of growth with us. And I think I try and lead with this modern mindset and think about what would I want to have as a customer? What would I want to experience as an employee? And I think I just keep the question forward every time we're trying to make a decision. What's a modern view of that? What is a modern view? We try not to hold on to anything that is going to keep us rooted in the past, except quality and service. And we move forward with a modern mindset and really focus on authenticity. I think authenticity is critical in leadership. Humbleness, asking for what you need. This culture has evolved so much, the Crate and Barrel Holdings culture, in a way that I'm very, very proud of. It's collaborative, it's quick, it's authentic. It's really a fun place to work, honestly. And I think when you have that kind of spirit and collaboration, there's just no stopping what a company can do.
It's a good jumping off point for last question, which is, and it's kind of a funny one because you've got so much going on, you're building so much momentum. What's next? What are you excited about? What's happening that you could call out and you see as a big milestone for this year and early next? You talk about systems, you talk about all kinds of really interesting things. But what rises to the top of that discussion?
Let's see. I'm excited about expanding our digital presence and the importance of our e-commerce presence. You know, there's definitely been a move back to the stores, and that has been in our favor. The foot traffic has picked up there, and we've done a lot of investment in our stores around design services, hiring great designers to work there. We've opened 10 stores in the last 3 years with new formats and looking really refreshed. And in the back half of this year, we are really going to focus on expanding our digital presence and the importance of e-commerce. So we'll get that omni experience even stronger. I think that the most important thing that I'm so grateful and impressed with every day is the extreme focus my team has. When we complete our technology investment, we're going to transform our supply chain. We're going to have a new digital platform. The store experience and the store formats will be new. And it's hard to stay focused because there's a lot to be excited about. But I think I'm really energized by the talent and the focus of this team and where they're taking the brands.
Yeah, fantastic. Well, lots going on. So really, on behalf of Steve and myself, thanks so much for taking a bit of time to share the story and share your story and the inspiration behind what you're doing at Crate and Barrel. And congratulations on your success and wishing you much continued success. So thanks again for joining us on Remarkable Retail Podcast.
Thank you. And congratulations on your success. And thank you for having me and being able to tell the story about Crate and Barrel Holdings.
Such a great discussion with Janet. I was super interested to hear that she was part of the Magnolia brand that I just discovered thanks to you on our Retail and Rib Texas tour. My ears really perked up.
That wasn't really a life-changing trip for you, wasn't it?
It really was. It really was. And a whole bunch of different
Magnolia.
levels.
I mean,
yeah. Fantastic. I turned my head around silos. We started talking about silos, really good silos, both renovation and revitalization of a town and of a retail concept.
You know, it's so interesting, I guess, to talk to anybody in the home business today because it is such a challenging category. But I love that, hearing a leader, hearing a brand talk about how they're going to keep pushing on growth because things are going to turn around. You know, the doldrums in the home market are not going to last forever. So I think one of the things we see a lot is brands that have a strong value proposition, have confident leadership, know how to execute, have a good balance sheet, they can really press their advantage. And so not only will that hopefully serve them well in the next year or two, but as the market comes back, I would think that Crate and Barrel is well positioned to have kind of outsized returns when that happens. So I think it's a really impressive story. She's a really impressive leader, and I'm just excited to see what's next from them.
Thanks for tuning in. And if you liked our episode, please take a moment to give us a 5-star rating on Apple Podcasts.
I'm Steve Dennis, author of Remarkable Retail, How to Win and Keep Customers in the Age of Disruption, and my brand new book, Leaders Leap, Transforming Your Company at the Speed of Disruption, which is available in hardcover, ebook, and Audible formats just about anywhere you prefer to buy your books. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, and media entrepreneur. You can learn more about me on LinkedIn. Safe travels, everyone.